Hi everyone, and welcome to the final part of our series, Carbon Clarity, your path to carbon accounting confidence. If you followed along, you've already mapped out your company's structure, gathered your company's activity data. Now it's time to make sense of those numbers and ensure your business is on the right track for sustainability and compliance. Let's get straight into it. Aligning with regulations. Compliance isn't just about checking boxes, it's about ensuring accuracy, transparency, and aligning your business to global standards. There are a few key frameworks to know. The GHG Protocol is the global standard for measuring and managing emissions reporting. ISO 14064, this is useful if you want to go a step further and get third-party verification on your emissions reporting. Local regulations can vary depending on where your country operates. For example, in the UK, we have the Build Back Greener plan, which is part of the country's goal to reduce net zero by 2050. Business operating in the UK will need to align their reporting accordingly. If you're working in the EU, you'll also need to consider regulations like the EU's Corporate Sustainability Reporting Directive, the CSRD, or if you're working in Australia, you'll need to consider the Australian Sustainability Reporting Standards. So what is the takeaway from this? Stay informed. Climate regulations are evolving, and staying ahead keeps your business compliant and competitive. Carbon accounting isn't just about internal goals, it's about future-proofing your business against changing laws. Collecting activity data. Before your carbon accounting platform can do its job, you need to make sure you're giving it the right data. This means systematically collecting activity data across your whole organisation. Oftentimes this data is fragmented. Energy data might live at the facility level, while Scope 3 data, like purchased goods and services, will likely involve procurement or finance teams. So it's essential to approach this step methodically. Let's look at an example for facility level Scope 1 and 2 emissions. You'll need to gather details like energy usage by type, for example electricity, gas, fuel, units of consumption, and time periods covered. You'll almost certainly encounter data gaps. For example, if you're missing months of electricity data, you might also have no recorded refrigerant leakage or only partial fuel usage records for a backup generator. But data gaps are okay. What matters is clearly logging those gaps. This lets you fill them in later using best practice assumptions. If you're missing data, you can model residual gaps using sensible estimation approaches, like extrapolating missing electricity data based on seasonal usage patterns, or estimating refrigerant leakage using floor space and standard leakage rates. The goal here is to avoid underreporting and keep your data consistent and credible. Think of this as laying the foundation. The more complete and well documented your data collection is, the more reliable your carbon accounts will be. Completing emissions calculations. Once your activity data is collected and any gaps are filled, it's time to turn that data into emissions. This means applying the right emissions data to each activity type. For example, electricity data is multiplied by a grid-specific emission factor, which varies by country and energy mix. Tools like IdeaGen Carbon Accounting can help automate this, but it's still important to know what's behind the numbers. Be sure to use the most up-to-date emission factors. Many are updated annually by sources like the BEIS in the UK, the EPA in the US, or the IEA globally. Also, double-check your units. A common mistake is skipping unit conversions, which can throw off your entire calculation. Another tip here is to ensure you are aware of any emission factor changes. Oftentimes, results can differ year to year, which can make them look a bit skewed. However, this may be due to the emission factors varying, so ensure you are aware of this before publishing any carbon reporting. Getting these steps right ensures your emissions totals are accurate, comparable, and credible, so your reporting holds up under scrutiny. Utilising your carbon accounting tool. So, how do you actually interpret and report all of this data in a way that makes sense? If you're using a carbon accounting platform like IdeaGen Carbon Accounting, it will do a lot of the heavy lifting. These types of tools break down emissions by category, provide benchmarks against industry standards, automatically align data with reporting frameworks, which can make your job so much easier because instead of wrestling with spreadsheets, you get clear and actionable insights. A tip here, the better your data, the better your insights. This is why it's so important to train your ESG reps on how to use the platform properly and ensure data consistency. Also, having a solid data source hierarchy is key because it sets out clear expectations from the beginning of the carbon accounting process, as opposed to mismatched data sources. What's the best case? Actual activity figures from meter data. Realistically, at the start, you might rely on invoices, rent agreements, estimated energy use, or basic travel spend. Either way, make sure the data is consistent and well documented. And don't be afraid to lean on your carbon accounting provider. They're experts, so ask questions and make sure you're understanding the data you're working with. Continuous improvement and final thoughts. Carbon accounting isn't a one-time thing, it's an ongoing process. Regularly reviewing your data helps you set realistic reduction targets, track your progress over time, identify areas for improvement, and stay ahead of evolving regulations. And let's not forget, transparent reporting isn't just about compliance, it's also a great PR move. Companies that report their emissions honestly and proactively are viewed as leaders in sustainability. So take this data, use it strategically, and turn it into real climate action. And that is a wrap on Carbon Clarity, your path to carbon accounting confidence. We've covered how to map your footprint, collect data, and analyse it effectively. Now it's time to take action. If you have any questions at all, feel free to reach out to the IdeaGen Carbon Accounting team, and don't forget to check out our brand new website. Thank you for watching.